Welcome to our final segment of the symposium, which is going to be an issue briefing. And we've invited three speakers to talk about three different issues in pretty good detail. I'm John Rowe. I'm a partner at BTR Trading Group, an introducing broker, and a proud NIBA member. Don't forget to renew your memberships, as Mike let you know. I've had the pleasure of serving on NIBA's advisory board and helping put this event together. As we've seen throughout the symposium, we work in a very innovative space, but it's also a highly regulated space. And just as innovation changes the way we work, from the launch of Globex to currency derivatives to even now blockchain, regulation changes the way we work too. So it's just as important to stay up to date on changes in regulation, changes in rules, as it is to stay up to date on the latest technological innovations and new markets that you transact in as a business. So with that in mind, our issue briefing today will help us do just that. Our speakers are going to address changes on AML laws, or AML policies and procedures rather, cybersecurity rules, the implementation of the European Union's General Data Protection Regulation, or GDPR, and we'll look at a regulatory forecast from DC, including a change to the accredited investor rule, which may open Reg D investments, commodity pool investments, to quite a few new market participants. Just a little housekeeping measure before we begin. Each panelist is going to come up and give a presentation for which we have some slides. If you would like to hold your questions until the end of each presenter, that'd be great, and they'll take a few Q&As at that point. Our first speaker is Valerie O'Malley, who is the Director of Compliance in the National Futures Association, the self-regulatory organization for the derivatives industry, and an independent provider of innovative and efficient regulatory programs that safeguard the integrity of our markets. She joined NFA as a staff examiner in June of 2004. She's a graduate of the University of Illinois, Champaign-Urbana, and she has a bachelor's degree in accounting, a certificate in accountancy, a minor in computer science. She earned her CPA designation in 2005 and her certified fraud examiner designation in 2013, so I hope your books are right. And if you'll give a round of applause to start.
Thank you. So the first issue that I'm going to be talking about is anti-money laundering. And as many of you may know, about 2 years ago, FinCEN came out with its final rules, which was the first time in a while that we have seen new rules in the AML space that impacted IBs and FCMs. And these requirements became effective on May 11th. Within the last couple of weeks, NFA has issued a notice to members outlining the updates that were made to NFA Compliance Rule 29C, as well as the corresponding interpretive notice 9045. These new requirements include that firms must now identify and verify the identities of beneficial owners of legal entity customers, and firms must now have policies and procedures for conducting ongoing customer due diligence. I'm going to talk a little bit about the beneficial owners of legal entity customers, and the new requirements outline that there are two types of beneficial owners that you have to identify for legal entity customers. And I'm going to refer to them as the ownership prong and the control prong. Under the ownership prong, firms now have to identify any individual who directly or indirectly owns 25% or more of an interest of a legal entity customer. And now, while 25% is the minimum, I have seen firms now saying that, okay, if I have a customer that's coming in that might be a little bit more high risk, or they're coming from a jurisdiction that might not have the best of anti-money laundering requirements, I'm going to change that threshold. And in some instances I've seen, they lower the threshold down to 20 or 10%, where they're getting more information on beneficial owners. So that's something to keep in mind, that that's something that you might want to adopt as part of your policies and procedures. If you've got more high-risk customers that are coming in, you might want to do some more due diligence on them. The other prong that I'm going to talk about is the control prong, and firms now have to identify one person who has significant authority to control, manage, or direct the customer account. So that's only one individual that you have to identify, and that could be the CEO, CFO, managing member, or general partner of the legal entity customer. As part of the new requirements, firms have to update their policies and procedures to obtain information and verify the identities of these customers, and it must at a minimum cover firms' CIP requirements. As part of obtaining the information for beneficial owners, firms now have to also obtain a certification from the individual who is opening the account on behalf of the legal entity customer. And in addition to getting certain information from them, they have to get this certification that says that they certify that the information that they're providing you is accurate. Now, while firms can place reliance on this certification, certainly if as you're going through and opening the account and monitoring the account, if you notice something that might seem suspicious or doesn't really add up, then you might want to take a little look further into that and then maybe request additional information from that customer. As part of the certification or the requirements that FinCEN put out, they included a template for the certification. Using that template is not required. You can use your own template as long as it encompasses everything that was included within the requirements. Another thing that I wanted to cover as part of the beneficial owners is that there are several exclusions that would apply to our members. And primarily the one that's going to stand out the most is that for the definition of a legal entity customer, it excludes any member firm that is an FCM, IB, CPO, CTA, swap dealer, major swap participant, or any pooled vehicle that is operated by those entities. So if you have a commodity pool that's listed with NFA, that is not subject to these new requirements. You don't have to go and dive into who are the beneficial owners. That type of customer is not included. Also, another major exclusion are publicly traded companies. So if you have a customer that's coming in that's publicly traded, this does not apply to them. Also, firms are not required to go and look back at their current customers and obtain beneficial ownership information from them for any customers that were opened prior to May 11th of this year. Now, if you have an existing customer who wants to open up a new account and it's at their direction that they're opening up a new account, then you have to obtain the beneficial ownership information from them. As part of the requirements, FinCEN put out that you can enter into reliance agreements. So similar to CIP, you can rely on a third-party financial institution if you meet the requirements for safe harbor. And I'll just cover those really quickly. That's the reliance must be reasonable. The financial institution that you're relying upon has AML requirements. And the financial institution enters into an agreement requiring it to certify annually that it has implemented an AML program and that it will perform the specified requirements of its beneficial ownership requirements. So very similar to CIP in that if you enter into this type of agreement and you meet all three of those requirements, you have safe harbor. Also, as part of the updates to the rules, FinCEN updated the record-keeping requirement, which very much similarly mirrors what's currently out there for CIP requirements. The other major update to the rule is regarding ongoing customer due diligence. FinCEN also amended the AML program requirements. So as we've referred to, there's the 4 pillars for AML requirements. So you have to have a system of internal controls. You have to provide for independent testing of your AML program. You also have to designate a compliance officer, and you also have to provide for training for appropriate personnel. As part of the new requirements, this actually established a 5th pillar, which is ongoing customer due diligence. And while this isn't a new concept, this update to the rules was more of codifying what firms were already doing, and that firms had been coming up with a customer risk profile. And as part of the rules, FinCEN said really what we're doing when we're obtaining information as part of 230 when you're opening up a customer account or getting information under CFTC Reg 1.37, that really helps you build your customer risk profile, and you can use that as a baseline when you're looking at customers' activity to see if they might be doing something that's suspicious. So what do all these requirements mean for our firms? So it means you have to update your policies and procedures to include all of the new requirements. If you are going to be relying on a third party to conduct some of your beneficial ownership requirements, you need to either update the one that you currently have that covers CIP to also include beneficial ownership, or enter into a new agreement that would cover your beneficial ownership requirements. Also, it's very likely that if you receive a call from NFA that we're coming out to examine you, we're going to be looking at anti-money laundering just to make sure that you have included the new requirements in your policies and procedures and you're following them. At this point, I'm going to take, before I move on to cybersecurity, I want to see if anybody has any questions on AML.
The last point there, as far as conducting ongoing monitoring.
Yep.
I'm sure NFA is going to come in and want to audit firms' compliance with that.
Mm-hmm.
How are firms supposed to demonstrate that they're doing that?
So there's a couple of ways that you can do that. It depends on what type of monitoring you're doing. So you might have an automated system that you can say like, hey, these are our red flags that we've put into our system. Here's when we're seeing exceptions, and here's kind of the investigation work that we've done. Is that?
Well, that might work for a big FCM, but what about for a lot of the people in this room that are smaller IDs?
It could just be as part of your ongoing review. So as you're looking through your equity month, you go through and look through it on a daily basis, you kind of have a good idea as IDs, you know your customers, and if you were to see something that was unusual, you should be documenting. If you're having to reach out to your customers to see like, hey, you know, you put money in and you took it out right away, like what happened there, you know, why are you doing that? It's always a good idea to document if you're reaching out to your customers on anything that might be suspicious. So if they said, hey, you know, I put that money in and I'm now taking it out because I'm closing on a house or something like that, you would want to update that type of information. You might then start to need to ask additional questions about, does this impact any of the other information that they've already submitted, like regarding their net income or net worth. So this is some of the things that you might need to keep in mind, but certainly documenting anytime that you see something that's outside of your customer's norm, that you might need to then go and update their overall risk profile. Okay. Okay, the next topic that I'm going to talk about is cybersecurity. So as you're aware, back in August 2015, NFA issued Interpretive Notice 9070 to NFA Compliance Rule 2-9, 236, and 249 regarding ISSP. This notice became effective in March of 2016 and requires firms to adopt a written ISSP to address the risks of unauthorized access to or attack of the information system. Because of the differences in size, complexities, and businesses that our firms have, the notice establishes general requirements but leaves the overall development of the ISSP up to each individual firm. As part of the requirements, firms' ISSPs must address and identify internal and external security risks, identify securities that are deployed in light of risks that have been identified. They must also include procedures to detect potential threats. There must also be an incident response plan and recovery program so that in the event that a firm suffers a cyber event, that they know what to do. And the ISSPs must also cover training for employees, and under the interpretive notice it says that you must provide training upon hiring and then periodically thereafter. As part of the ISSP requirements, firms must also review their ISSP program on an annual basis. And this can either be done by someone who's in-house and has knowledge about cybersecurity, or firms can engage a third party that's in the cyberspace. Since the interpretive notice has become effective, NFA has held several outreaches and workshops, and in February 2016, NFA issued the cyber questionnaire as well as FAQs to help our firms comply with the new requirements. On NFA exams, NFA has been taking an educational approach with respect to this area as it's newer. So we've been looking at firms' policies and procedures and helping the member update the policies and procedures where needed. Some common deficiencies that we've seen when we've been out on exams is that firms might not necessarily have a policy or procedure, so we're helping them put that together. The ISSP that a firm may have might not necessarily be tailored to the firm's operations or might not include all risks that might be applicable to that firm, so we've been helping them update there. Training has been another area. You know, as the notice states, it says that it must be provided periodically after the initial training. So we've been providing guidance there, and I'll talk a little bit more about that later. We've also seen that firms are not completing their annual reviews. So certainly keep these types of things in mind as you're going through your annual requirements, that these types of things need to be done. When a firm experiences a cyber event, they might reach out to NFA to let us know kind of what happened and what kind of corrective action has been taken. And we've been made aware of several different types of events that I just kind of wanted to talk about briefly. One is including ransomware. So we have had firms contact us to say that a computer might have been locked up and there's been a request for Bitcoin to unlock the computers. So in these type of instances, you know, it's very important to make sure that you have your data backed up, especially your critical data. And then it's also very important to keep your employees apprised of the types of phishing attempts that are out there, the types of attacks that could be out there that, you know, they shouldn't be clicking on things that are attachments from people that they don't know. So obviously those types of things can be incorporated into your periodic training that you're providing your employees. Also, we've been made aware of fraudulent requests to transfer funds. So in 2017, the CFTC took an action against Tillage Commodities for failing to supervise its fund administrator's operations over the use of its pool's bank accounts. In this instance, over the course of 3 weeks, the fund administrator received and executed on fraudulent requests to transfer funds, and this resulted in a loss of $5.9 million to pool participants. I was on a panel earlier this year with a couple of FBI agents, and with regards to this, they really want to get it out there that there's this misconception that if you contact the FBI, if you had a loss of funds, that they're going to do a full-blown investigation into your firm, and they want to say that, get it out there, that that's not necessarily the case. They're going to come in and look at that specific cyber event. Obviously, if they encounter something that would spark another investigation, they would need to look into that. But really, if you're contacting the FBI, they're coming in and just looking specifically at that cyber event. And they also want to get out there that if you have encountered an issue where funds have gone missing from your bank accounts, pooled bank accounts, contact the bank immediately. As soon as you figure out that something has happened, contact the bank, because the quicker you can do that, the increased, it's more likely that you might be able to get the funds back. Certainly by 72 hours from what I've heard is stretching it. You want to contact your bank within 24 to 48 hours to have the best chances of getting your funds back. So that's something that's they want to kind of get out there. They're, actively, if you contact them, they're very responsive. They'll help you through your cyber event and try to help you get remedial action in place too. Another event that we have seen is unauthorized access to sensitive information. The CFTC took an action against AMP Global Clearing this year for failing to adequately implement its ISSP. In this case, several customer records were left on an unsecured server, and a third party got access to this information and copied almost 97,000 files before contacting authorities about trying to secure the copied information. To protect against the unauthorized access to sensitive information, firms should be making sure that they're using firewalls or encrypting sensitive data where possible. So if you're sending out information that includes PII, making sure that you're zipping that file or using some other sort of encryption when you're sending that. I'd also like to talk about some of the next steps that NFA is taking. So based on the events that have been reported to us and some of the things that we've seen on exams or questions we've been posed, we're taking a look at the interpretive notice and the FAQs and making updates to that. One area that I mentioned earlier, training, is one area that we're looking to update. So as I mentioned before, the requirements state that you have to provide training upon hiring and then periodically thereafter. We received a lot of questions on what does it mean to be periodic. We've seen a wide variety of what firms are defining as periodic in their procedures. So we are looking to update that portion of the interpretive notice to require that training is going to be should be provided at least once a year, and then if firm operations dictate it, so say you have a large firm, you've experienced a lot of breaches or a lot of attempted breaches, that you should consider whether training should be provided on a more frequently basis than annual. We're also looking at having firms report any breaches that they may experience. We've heard that there's a lot of breaches out there. We've been there are events that have happened, but we haven't necessarily been apprised of all of them. So we're looking to not have you guys undertake a lot of additional requirements, but the current thought right now, and we're still ironing out all the details, is that if you're reporting to another agency, that we would just ask that you provide that information to us as well too. We don't want to make this an onerous thing on you. As I said, the details on this are still being worked out, so there'll be more to come within the next couple of months. And as we're updating this, we'll certainly have more workshops, and we'll be updating both the FAQ and the interpretive notice. We've also taken initiative to update our exams. So we had, as I mentioned, we've been taking an educational approach and reviewing policies and procedures. We have also enhanced our exam programs to also obtain an understanding of what types of controls our firms are employing with regards to cybersecurity. So obviously one high-risk area is firms using third parties, whether it be an administrator or some sort of custodian. So trying to find out what types of controls our firms are employing with regards to that. Finding out our firms having due diligence questionnaires filled out before establishing a relationship. What type of ongoing monitoring our firms doing? So those are the types of things that you might be hearing our examiners ask more questions about. Do you have cybersecurity insurance? Have you experienced a cyber event? Just so that we can get an idea for the types of controls and things that our firms are doing with regards to cybersecurity. We have also hired a cybersecurity expert, and we are going to be hiring more individuals in this area. We expect that these individuals are going to be going out on our examinations to help take a look at in addition to the policies and procedures, looking at the implementation of firms' ISSP and looking at the more technical aspect of things. We also anticipate that these individuals are going to provide our examiners more training, they're going to provide our members with more guidance, and we're going to look to further enhance NFA's exam programs as well as the interpretive notice and the FAQs. So those are some of the things that we are doing with regards to cybersecurity. Does anyone have any questions on any of those initiatives or anything that I've discussed? Thank you.
Thank you. And we learned another use for Bitcoin, ransom. So. Our second speaker is Mr. Michael Sorrell. He's the Associate General Counsel for the Futures Industry Association, or FIA. The FIA is the leading global trade organization for futures, options, and cleared derivatives. Mr. Sorrell aids FIA in its mission to support open, transparent, competitive markets, enhance the integrity of the financial system, and promote high standards of professional conduct. Prior to joining FIA, Michael was an associate with the law firms Morrison & Forrester, my favorite firm, MoFo. Otherwise known as MoFo. Covington and Burling, working in their derivatives practice area. He also served as law clerk for the Honorable Robert E. Payne for the Eastern District of Virginia. He himself is a graduate of the University of Virginia, where he also went to law school. Michael?
All right. Thanks. All right, I promise you I'm not playing Fortnite. This is going to be my stopwatch to try to keep myself honest here. So I'm the lucky guy who's tasked with talking about arcane EU privacy rules. Let's see if I can figure this out. So as John said, I'm Mike Straub. I'm the Associate General Counsel at FIA. And a few housekeeping items just before we get started. I am a lawyer, but please, please, please don't take this as legal advice. If you have GDPR questions on how it relates to your firm, consult an expert, someone who does this for their day job. I'm a futures lawyer masquerading as a privacy lawyer today. And these are not my personal views, or these are my personal views rather. They are not the official views of FIA and certainly don't represent the official views of our members. Quick show of hands, how many in the room have heard of GDPR? Okay, so the word has gotten out. So of those people, how many wish they never heard the word again? So this thing is behind me. It's meant tongue-in-cheek, but when we had our initial conversation with our marketing department about the GDPR, I think they sort of imagined it something like this relative to our business and what FIA does. And I think thankfully over the course of a number of subsequent conversations, we've gotten them comfortable that though this is a significant shift in the way firms do business and will operate, that it doesn't pose an insurmountable barrier and the world will not end, I promise you that. So, got a very limited amount of time. I think you could have an entire panel or indeed an entire conference on the GDPR, so I'm going to keep this at 40,000 feet for purposes of today. It's very high level. This is really, you can think of this as a summary of a webinar that we did on GDPR for FIA members. It's actually available on our website, and it's done by our privacy counsel who knows a lot more than I do. So if you have an interest in the GDPR, I encourage you to check that out. If you just go to Google and check in FIA webinars GDPR, it'll come out. This is meant to really whet your appetite. Some basics, the GDPR became effective earlier in May. So technically all firms that are subject to it should be compliant. It marks a paradigm shift in the way that companies can handle data going forward. I like to think of it as really bestowing property-like rights for EU residents and how their personal data is handled by companies. And I think, whereas before, at least here in the US, I think the assumption has been if you can get data, as a company, you're entitled to really use it in any way you can. There are a few rules here and there that limit that, unsubscribe buttons on email lists for marketing, but in general, firms have been pretty free to do what they want with data. The GDPR puts the onus on firms now to articulate and have a legal basis for any type of processing of data. And there's 6, I believe, in the regulation. I think the ones you probably heard the most about are consent from the data subjects, having a legitimate business interest, rather the processing be necessary to support a legitimate business interest, having a contractual obligation to process the data, or having a legal obligation. 2 terms I think you really need to understand to have a conversation about the GDPR is personal data. That's probably obvious, but I think the key takeaway there is it's extremely broad. It's really anything that can be used to identify an actual person. So you've got in that, you've got email and address and telephone and the like, but you also have some things in there that might not be so intuitive, at least for Americans. And that is professional info. So there's no distinction in the EU between private, sensitive personal data, like maybe a social security number here, and data that you can find on LinkedIn, on someone's professional profile. The fact that it's public doesn't mean that it doesn't get the protections of the GDPR that we'll discuss in the ensuing slides. So why am I up here standing here talking about EU privacy rules? Well, the GDPR applies to all firms, whether they're in the EU or not, that process EU individuals' personal data. So there's no third country exception or accommodation like you might have, or you might have heard in MiFID, and there's certainly no de minimis threshold for like you might have for swap dealer registration. Technically speaking, if you have one European employee or one European customer and you're processing their data, you're going to be within scope of the regulation. And processing, I should have talked about on the last slide, processing basically means anything that you can do with data. I mean, I can't really imagine you attaching a verb to data and it doesn't fall under the category of processing as defined in the regulation. So storing data, using data, destroying data, it's all going to fall under the GDPR's ambit. And there are very strict penalties for non-compliance with the regulation. I think that there is an open question as to what the authority of the EU regulators, what authority EU regulators have in practice to come and fine a US-based organization that has no contacts in Europe. Certainly if you have assets or any operations in Europe, those would be within scope and they could come after those if there were a violation. But I think really if you're asking, well, what authority does the EU have to come after me, you're really asking the wrong question, because they can issue a public censure. And you just imagine what your customer's reaction is going to be when they Google your name and the second thing that pops up on Google is a regulatory violation that's outstanding. That's not ideal. So I really don't think you want to be the test case for the scope of the EU regulators' jurisdiction. I just want to I think that rather than going into detail on this slide, I'll talk about most of what's on here in the ensuing slides. But the GDPR divides the world into three categories, really. There's data controllers, there are data processors, and there are data subjects. And data subjects are the EU residents that have their personal rights in their information, EU natural persons. And data controllers are the entities that most of the requirements for GDPR are attached to, and those are the entities that have the ability to decide how and why the personal data is being processed. And then there are data processors, and those you can really think of as sort of like vendors or consultants. These are people or entities that are acting on the data controller's behalf and are processing the data at the request of the data controller on behalf of the data controller. For today, I'm really going to focus on what the data controller's obligations are, because in general, if you have, with respect to any EU customers that you might have, you are going to be considered most likely a data controller, and those obligations are going to attach. Two bullets I'll note on this slide. You have to honor the rights of individuals, and there are a whole host of rights that the GDPR gives individuals. You might have heard of the right of erasure, so if they request for personal data to be destroyed or erased from your system or to have copies of it made, in general you have to provide it. You might have heard the principle of data minimalization, which is to use data only for the purpose that it was given to you for, or sort of was reasonably contemplated in the provision of that data. You might have heard the concepts of transparency and fairness, and in general, the GDPR asks or requires of firms to disclose how they use data and where possible to get consent to the use. The other bullet I want to pause on is the organizational accountability. The GDPR really views data privacy and data protection as a board level issue or a senior management level issue. So I don't know the composition of everyone here in the room here. Maybe there's some mom and pop shops, maybe there's some medium-sized firms. Whatever your sort of senior management level structure is, and if you have EU customers or EU employees, I highly recommend that you make those senior management aware of the GDPR and what it requires, and have them be actively involved in your compliance plan going forward. So I want to just touch very quickly in the remaining 7 minutes or so that I have to just talk about some implementation steps, things that you might want to keep in mind as you think about it. Well, how do I make the firm compliant with the GDPR? And I think the first step, and I have to admit, as being the one at FIA that did this, is the most painful, is you have to know your data and you have to know what you do with it. And that really involves, the only way you can do that is really to create a data map of every area where you have personal data, and make rows, and in each row say, document how you use it, and see if you can connect the use to one of the legal bases in the regulation. It's a tedious process, but it's one that really all the other requirements can be met by using this data map and using that as sort of a reference as you think about implementing your compliance plan. And when I say data, again, I'm talking about any EU customers, any EU-based vendors, consultants, and definitely employees as well. You need to know your vendors and what types of data you provide. I think a highly sensitive area for regulators in the EU is providing data to third parties. And to the extent you provide data to third parties, you better really have a good reason for doing it. So if you're using, if you're having third parties assist you with trading platforms, IT, human resources, these are all things you need to think about. What data is going there, and is it EU resident data? What the GDPR generally requires you to do is to have a data processing agreement in place with any of these third parties, and it essentially requires them to rep to you that they are compliant with the GDPR, and they will do everything that is required of them to make you compliant in GDPR. For example, if you have a request from a data subject to delete their data, that you could flow that request on down even to the third-party vendors that you might have provided that data to. It's always best to have written policies and procedures. I think any lawyer would tell you that. It certainly varies based on size of firm, no doubt. And I just think the benchmark you really want to keep in mind here is transparency and fairness. You want to have policies and procedures that promote transparency, both internally with respect to EU-based employees and externally with respect to customers, about how you're using that data, and that you're only using that data to meet a legitimate business purpose. Another area that you really need to focus on is the dedication of resources to data protection, and I think that that involves certainly an IT component, although there's only a very small reference, and we just spoke about cybersecurity, and I think there's the criticism of the GDPR is it only basically says you need to have reasonable security measures in place in view of the types of processing you do, and that's about all it says with IT. But there's certainly an IT component to it, but it's not all. It's really, you need to have staff, and I'm not talking necessarily, depending on the size of the firm, it might be, if you're a large bank, it's probably going to be a data privacy officer, but it could just be someone in the legal department or compliance department who has some dedicated time set aside to deal with privacy issues, and that's part of their job title or part of their formal functions that they're evaluated on. And you certainly want to consider, again, this is sort of dependent on the size of your firm, but some type of periodic training to make employees aware of your company's obligations based on your data processing. This slide drills down just one more layer, sort of peels back one more layer of the onion and lists a few other things that you might want to consider in implementing the GDPR compliance program. We've spoken about a few. I'll highlight just a handful more in the interest of time. You definitely want to have a plan. I think that's obvious. I think that it maybe not so obvious is that plan really should involve senior management. And you want to give thought to disclosures and consents. That's sort of the gold standard for processing data under the regulation, is if you have expressed an informed consent. We did this at FIA, this evaluation. I think you quickly find it's not always possible or clean to get that type of consent, but where you think you can get it or make those disclosures, I would encourage you to do so. So, things that come to mind, updating a privacy statement on a website. If your website uses cookies, which ours does, and I suspect a lot of yours does as well, it's pretty common practice in talking to our IT group, you might want to have a cookie disclosure and a cookie consent that pops up when new users come to your website. You might want to consider some type of disclosures or customer consents at the point of onboarding. So as part of this just sort of general packet that you give them of your disclosures, consider privacy and data protection disclosures in there. I think in terms of the scenario where you're most likely to get in trouble with an EU regulator would be when you have a data breach. And it's really important to have a plan when if, God forbid, there is a breach, that you have a plan of action. It's important from the GDPR's perspective because there are certain breaches that may require mandatory notification to the data subjects and to the EU regulators, and indeed there are laws in the US that might require that are on the books now. But I mean, it's also important, I think, just from a good business standard to try to mitigate your risk and any fallout that might ensue from a data breach. I think it's a good idea to give good thought to data retention policies and make sure that they not only accommodate your business needs, but that the GDPR is integrated into those data retention policies. Everything we've talked about today is about trying to avoid coming into the crosshairs of the EU regulators, but the one thing really to consider is just getting insurance. So if something does go wrong, something does fall through the cracks, you have some type of monetary protection. And I just note that usually general commercial liability insurance policies don't cover cyber breaches, they don't cover privacy violations. So you really want to consider a separate plan, a cyber plan, a privacy plan, whatever the nomenclature may be. And I'd say too, I mean, the word from our broker at least is that they're relatively cheap right now because the GDPR is in its early stages and there haven't been massive fines levied yet. They're coming for the larger institutions, but those plans are probably going to go up in price as the GDPR gains prominence. So I'm already at time. I have some quick parting thoughts for you. I mentioned that the GDPR came into effect in May, so it technically is on the books and firms are expected to be compliant. But everything that we've heard from the EU regulators is that they're really looking for good faith efforts in the early stages. It's particularly if you're a small or medium-sized firm. What they're looking for is a real effort to get policies and procedures in place to comply with the GDPR. And I think regulators appreciate that there's IT solutions involved here, there's a technological component, there's policies and procedures, and there's a culture change, and it's going to take time. And while I don't think it's necessarily a get-out-of-jail-free card, I certainly think it's a mitigating factor, and certainly for medium and small-sized firms, good faith compliance will go a long way. And then my final 2 points, I just want to make clear again that GDPR is not, although it has an IT component, it's not wholly an IT issue. So to the extent any vendors or anyone is out there saying, I've got a GDPR compliant tool and it's going to make your firm compliant, I'd be highly skeptical of those types of claims. It really involves a top-down approach restructuring of your policies and procedures to get there. And then if everything I've said hasn't really convinced you that the GDPR is something that U.S. firms should care about, and maybe you're in the boat of very few EU customers or EU contacts or none at all, I just note it might be worth checking out. California just passed a new privacy law. It's been sort of colloquially called GDPR Light. If I were a betting man, I think that it is much more likely that you see more of these laws at the state and federal level here than it is that you get a rollback of privacy requirements in Europe, because I mean, data is everything. We're in a big data age, and as it gains value, companies are only more incentivized to use it and abuse it. And I know that's not us in this room, but I think what you're going to have is you're going to have constituents in various jurisdictions demanding of their governments that they take steps to protect them and to prevent abuse of data. Similar laws might be coming here to the U.S. in the not too distant future. So I know that was a very quick run through of some very technical requirements. Happy to talk to you after the panel too, or field any questions that you might have. Sure.
Does your webinar go over this in more detail?
A lot more detail. It's about an hour long. So yeah, it's really hard to touch. GDPR is it's a highly technical rule. There's so much there. So I do, if you do think you're impacted by it, I think that webinar would be, I mean, this, again, whet your appetite. The webinar will have a lot more there. And it is like this sort of, it's implementation focused. So it does go over the law to level set, but a lot of it is focused on, practical solutions that firms can take of varying sizes.
What kind of observations have you had in relation to the regulators' retention requirements and the right to forget?
The right to forget is a really tricky one, and so it's gotten a lot of headlines. I think because it's like the right to forget is a sexy title, but I think what you're so see some of the challenges I think that firms have, and I didn't even touch on this, is like we're a highly regulated industry. We have record keeping rules and reporting rules, and so the right to forget is not an absolute right. So what you'll find is if you look at the regulation closely, that it does allow firms to essentially deny those types of requests if it's going to prevent the firm from carrying out a contractual obligation or a legal obligation. It's complicated by the fact, though, that the EU privacy rules don't recognize U.S. law as providing a basis to claim the legal obligation. It only recognizes EU laws. So I think you're left with claiming a legitimate business interest to comply with your regulator, which, I mean, again, my personal view is that's a very legitimate business interest, but it's not a clear-cut answer, and it's certainly one that shows why you really want to document and just think critically as a company. Even if you think you're not really in the GDPR bucket, it would be great to have a manual from your legal department that walks through the analysis as to why that's the case or why you can't honor those types of requests when you get them.
Thank you. Didn't realize I had a right to forget. I'm going to use that. I forget something. We're bumping up against the cocktail hour. We're very aware of that. So our final speaker is Ansley Strip. She's a staff attorney with Baker & McKenzie, where she represents futures market participants in navigating their regulatory obligations. She also boasts a tenure at the National Futures Association going back over 5 years. She served as a senior compliance examiner in the OTC derivatives department for several years, and she became the staff attorney for the general counsel's office, where she helped develop amendments, interpretive guidance, and advise NFA's internal staff on regulatory matters. She's a graduate of the Columbus School of Law at the Catholic University of America, and more importantly to me, she's a graduate of the University of Tennessee. Go Big Orange. So with that, Ansley's going to discuss the regulatory forecast from DC.
Thank you, John. So as John mentioned, I'm an attorney. I am not a policy analyst, and I am certainly not a gambler. Not very good at predicting the future, but we have forecast in the title, thanks to these guys. And so I will do my best and let you guys know what's going to happen with accredited investors, which is probably not much this year, and then talk a little bit about change at the commission. So as you see up here, we have something that you don't see very often, the word bipartisan. So right now, as of late July, the House Financial Services Committee has put forth to the full House a package of bills they're calling Jobs Act 3.0. It's actually 32 bipartisan bills that have passed a committee or Congress in the last year and a half with bipartisan support. And among them, there are issues regarding crowdfunding, credit reporting, small business, improvements, credit union relief, and most important for us is the Fair Investment Opportunities for Professional Experts Act, which would modernize the definition of accredited investor. Right now, accredited investors include banks, some small entities, those entities that among their members and owners have all accredited investors. And for individuals, there's a natural persons test. And that's a net worth of at least $1 million, excluding your primary residence, or earned income exceeding $200,000 for individuals, $300,000 for individuals with spouse over the past 2 years, and a reasonable expectation that those will continue in the current year. So basically 3 years of consistent $200,000, $300,000 threshold earned income. And so what this act would do is actually expand that definition. And so in mid-July, you saw the House Financial Services Committee, the chair, Jeb Henserling and Maxine Waters, pushing forth this initiative, and they actually have an agreement from Senate Majority Leader Mitch McConnell to call a vote in the Senate if this legislation manages to pass the House. So we talked about the natural person test. We'll just skip straight to the new stuff, which is the proposed addition in this bill would actually expand into, as you can see, any natural person who is currently licensed or registered as a broker or investment advisor by the SEC, FINRA, or an equivalent SRO, MSRB, or the Securities Division of a state. And then any individual determined by the SEC to have qualifying education or experience. So this would basically give the SEC rulemaking power to determine what that is and update it on an ongoing basis. It would also put an inflation-adjusted method in for the $1 million calculation under the current natural person test. Now, this did pass with overwhelming bipartisan support in the House last year, but the likelihood of it actually making it to a vote and or being passed this year largely boils down to one date, which is November 6th, and the likelihood of anything really happening before then is not very good. Because as many of you know, there are lots of people politicking between now and then. Though there is the chance in the lame duck session thereafter that something like this could get more legs than it currently has. That said, my disclaimer at the beginning is that I'm not a gambler, so who knows what might happen in the next month or two. Important for this crowd is there are also changes afoot at the commission. So as we all know, Chairman Giancarlo has announced that he's planning to retire at the end of his term. His 5 years expires at in April 2019. Now, as we know, that doesn't mean it's a hard stop. Commissioners stay on, their terms are extended. But for now, he's made public overtures that he might be leaving us. We're approaching the end of the first year with our two new commissioners, Commissioner Benham and Prince. And they're getting their feet. We've seen them out and about a lot in the last 12 months. And then most recently, we have a commissioner awaiting confirmation. Democratic nominee Dan Berkowitz. The Senate Ag Committee advanced him to the full Senate on July 31st. And with his eminent experience at the commission already, I don't think anyone anticipates any trouble confirming him. So with all of those changes on a five commissioner body, there are a lot of initiatives afoot that may not really move until you have all 4 commissioners in place and then some certainty about the chairmanship moving forward. But for right now, we still have on the burner, I'm not going to talk about virtual currencies. I know you got the crypto panel earlier today. Reg AT, which is still out there. I don't know that there's that much clarity. The chairman clearly had a lot of reservations early on about the source code issue and the due process implications of that. But I do think that there is still some will, judging by my sources at DMO, to get something out, though it might be a much reduced proposal from what we saw in both the original proposal and then the amended proposal in 2016. And then, as you saw today, Project KISS is still moving forward. In addition to all of the comments collected on general matters across the range of commission regulations, you saw today that the CFTC voted unanimously to approve a proposal to codify the policies and procedures for clearing organization exemptions for those located outside the U.S. to obtain those exemptions. So far, they've granted 4, but the process is laborious, and I think they just want to create more transparency around that moving forward. So there are many things to take into happy hour from this, and again, it's hard to know what's going to be happening, and most of the time we're much more in the nuts and or in the weeds on the actual implications of these derivative regulations and how they affect IBs like you and then any other market participants in this space. But I do appreciate the challenge of trying to predict the future. So anyway, does anyone have any questions? Great, let's go celebrate.
All right, real quickly, I don't want to get in the way of the cocktails. Thank you to all of you for attending today. It was a great day. A few bookkeeping items. Please remember your take-home bags. To the registrants in the room, do not forget my tip. It was free about claiming your free membership to the NIBA. Go to the NIBA website, first page, hit the membership button, and you'll be all set. Special thanks to Leo Malamed for participating with our host, Dr. Carl Luft, in today's opening session. Thank you to Dr. Carl and to everyone at DePaul for hosting us today and being our academic partners. Thank you to Tom Sandy and Katie Turvin for chairing our events today and for coordinating this great program. Also, thank you to our 25th anniversary sponsors, Bar Chart, Straits Financial, Wedbush Futures, Rosenthal Collins Group, Midland IRA, Clear Software, RJ O'Brien, Gain Capital, INTL FC Stone, Mike Coglianese CPA, EDM Investor Services, and Ruddy Gregory Law. Last but not least, thanks to all of you for attending today. It was a great day, and we certainly appreciate you being here. So now let's head out to the patio for some adult beverages.